And we're going to do a very fast market update. And then we're going to do a commercial REIA meeting, which will start in just a few minutes. So I've got some new people joining us online. So I'm going to reset the online people. Welcome everybody online to the Texas REIA. It's the largest network of real estate investor associations and real estate investors in Texas. 150,000 members, participants, and attendees going back to 2003. The Texas REIAs has 257 vendors, 1,000 private money lenders, 4,000 accredited, sophisticated commercial investors, and we provide training and market date updates and money and resources for real estate investors. So I'm going to give you a very quick market update, share a little data on what's going on in the market. Because as real estate investors, you always want to be a student of the market. So what's going on in the market? This is the Texas Roundup. The average price house in the state of Texas right now is $425,000. It is up 1% over 1 year ago. The median price house in Texas is $335,000. It is down 1% versus 1 year ago. So the market is flat, flat, flat. But if you want just one number, one data point that tells you what's going on in the marketplace, this is the data point you want right here, months of inventory. If you just want a barometer like what's going on, look at months of inventory. What is months of inventory? How do you calculate that? If you took all the houses for sale in the MLS and you stopped adding any more houses for sale, if you just said, okay, no more houses for sale, we're just going to sell the ones we have, but not add any more, how long would they last? How long until the last house gets sold? Till the shelves are dry? The answer, 5.6 months. That's how many months of inventory we have. That's also the average amount of time to sell one house. Now, average. Some houses take a lot longer, some houses a lot faster. Average is 5.6 months. Let me put that into perspective for you. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. What kind of a market are we in right now? What do you think? It's a seller's market by every definition. Not much of a seller's market, but technically it's still a seller's market. How come we never got into a buyer's market? Let's look at the history. 2021, prices went up 18% in 1 year. 2022, another 10.7% in 1 year. 2023, flat. 2024, flat. Except at the end of 24, prices went up a little bit. Why did they go up a little bit at the end of 24? What happened at the end of 24? Interest rates went down a little bit, prices went up a little bit, but not much. Okay, real estate. What's going on? What's going to happen next? Okay, what affects real estate? Real estate is affected by two things, supply and demand. That's all it is, supply and demand. The biggest thing that's changed over the last several years is interest rates. When interest rates go up, what happens to home prices? They go down. Who thinks they go down? Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, prices go up? Who's not voting? Well, the ones that are not voting probably got it closest. It does this, goes up and down. There's counteracting forces. I'll give you an example. Normally, 2/3 of the houses you see for sale are resale, and 1/3 of the houses for sale are new construction. That's the normal mix. Right now, it's inverted. Why is it inverted? Why aren't people selling their homes? They got a 3% mortgage, they don't want to give it up. That's why. They should. The economy is not bad. People have jobs. People should be saying, honey, let's go buy a bigger, nicer house. Well, what is Honey saying? No, we got a 3% mortgage. If we buy a new house, we'll get a 6 or 7% mortgage. I want to keep the 3% mortgage. So all that inventory is being held off the market. And when you have less supply, what does that do to home prices? Pushes them up. We got another big problem or opportunity or unique situation here in Texas. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Pretty obvious. And there's another 12 million people, we don't know where they went, but there's a bunch of them here too. And they all need a place to live. And there's a problem. We don't have enough houses. Who's heard this? We are in the middle of a housing shortage. How many of you know this? We have 6 million fewer houses than we need for the amount of people that need a place to live. There's not enough supply, and we're not building enough supply. And when you don't have enough supply, what does that do to home prices? Pushes them up. So yeah, interest rates went up, houses became less affordable, fewer people could afford them, so the demand went down, fewer buyers. But at the same time that the demand went down, right, the supply went down. And when the demand goes down and the supply goes down at the same time, what happens to prices? Flat. And that's why we never got into a buyer's market. So where's it going next? Well, let's talk. What drives the market? The economy a little bit. Real estate doesn't care that much about the economy. To be honest with you, during the Great Depression, real estate prices went down a whopping 6%. Nothing. During the Great Pandemic, we all lived through that one, another 1 in a 100-year event. Real estate prices went up 30%. You see, the economy does not directly drive real estate, but it indirectly drives real estate. It affects in different ways supply and demand. So, what affects real estate? Consumer confidence. Yellow is neutral, green is up, red is down. Consumer confidence, right in the middle. We're not unconfident, we're not confident. Unemployment's pretty good. People have jobs. Job growth, not bad. Stock market is making money. People feel richer, and they're more likely to buy real estate when they feel richer. Business growth is good in Texas. Overall, the economy is pushing things up a little bit. Affordability, interest rates. Ooh, interest rates, that's red, right? Interest rates went up. Houses are less affordable. That's pushing demand down. House price trajectory is flat. It's not up, it's not down, it's just flat. Supply, active listings flat, months of inventory right in the middle, right between buyer's market and seller's market. Housing permits trajectory, we got a problem. We're not building enough houses. We got a housing shortage. We don't have enough supply for the growing demand, that pushes prices up. We got another problem, construction labor growth. Contractors are getting old and dying. Okay, the average general contractor is 58 years old, and that number keeps going up. There's not enough people to build houses. So I got some advice. If you have a teenager, don't send them to college. Buy them a hammer. Dead serious. I know plumbers that are making 7 figures, guys. I know plumbers making $1 million a year. You can go to college, pick up a lot of student debt, get a crappy job working for some jerk, right, with 2 weeks vacation, or you can skip all that, become a plumber, and make $1 million a year, right? Go on vacation anytime you want, first class. I mean, it's like, I went to college. My parents went to college, and now I have a teenage son, 16 years old. I could give a rat's behind whether he goes to college. I don't care. If he wants to go to college, I'll send him to college. But it's not a requirement in my family. I think there's plenty of things you can do to be very successful in life that don't include college, right? That's just my opinion. But yeah, we got a major problem. We don't have enough contractors. And because of that, it's harder to build. Construction costs have gone up, which drives prices up, et cetera. Demand, closed sales trajectory flat, pending sales trajectory flat. But this is really this should be a triple size bullet. Migration, that's the ratio of people coming in versus people going out. Texas has a huge in-migration. The population is growing rapidly. Everybody needs a place to live. It's going to be an apartment or it's going to be a house, right? We don't have enough houses, and that's what's driving prices up. So even as demand pulls things down, the demand from new migration pulls prices up, and that's what's kept our market healthy. So where's it going from here? And by the way, guys, this is not my data or my forecast. All of this comes from the Texas A&M School of Real Estate and a number of online resources. We do market updates every month. We're not here to try to persuade you of some particular political opinion or whatever. There's a lot of groups out there that give forecasts, and they always say the market's going up, the market's going up. When the market's going up, we will tell you the market's going up. When the market's going down, we're going to tell you the market's going down, because we got ways to make money up and we got ways to make money down. When the market's going sideways, we're going to tell you the market's going sideways. So where's the market going? It's going sideways. If you were looking for some big exciting market bottom, that was probably it, and there wasn't much to see. We probably are going to get some interest rates cut as early as this week. That's what all the experts say. We expect that they're probably going to drop half a point, maybe as much as 3/4 or a point between now and the end of the year. The drops in interest rates should give a little bit of a boost, okay, to the market, but not much, because there's a lot of inventory that is piled up. So we expect prices to pretty much be flat between now and the end of the year, maybe up 1%, which is not much, by the end of the year. So that's our big exciting forecast. By the way, we've been doing forecasts for 20 years here at the REIAs, and the forecasts have always been pretty spot on. And it's not because we're some kind of crazy geniuses. It's not that hard. Predicting the economy is impossible. Predicting the stock market is absolutely impossible. Predicting real estate is not that hard. And the reason it's supply and demand. We know how many houses we have. We know how many people are having babies. We know how many people are moving here, pretty much. We know how many houses we're building. We know how many houses we're going to need. We know how many houses we're going to have. We know just about everything that affects supply and demand. There's a couple of things we don't know exactly where interest rates will be, and so there's little things that'll affect things a little, but there's nothing huge that's going to affect things in a huge way.